Today we're looking at an investing robot that's done 50% returns in the past 2 months alone. It's currently down about 10%, but it's been killing it since it's been live. And this is with live money, not backtesting or paper trading. The robot was built by one of our Discord community members, BrianE. So if you have any questions for him, you can find him on our Discord, and if you're not a part of the Discord, there'll be a link below. This robot was built with a software called composer.trade, which there'll be a link below for that as well. Whether you're a brand new investor or a 20-year seasoned veteran, our Discord community is designed to teach you how to make investing robots from scratch so that you can beat the stock market and be at the cutting edge of technology when it comes to a retail investor. With that said, let's jump into the video and check out this investing robot. Okay, so I have just skimmed the logic tree. I really didn't look too much into it because I wanted to have like a fresh look coming into this, and I wanted to hear like what your thoughts and designs were on this. And for the call, I think what we'll, since there's not too many people here, if you guys want to jump in and ask questions, you can. But if more people do join, like if we get up to like 10 or 20 people, let's hold off questions till like 20 minutes, so that way Brian can get through like the explanation, and then we can start, looking into it and questioning it. But call's all yours, Brian. Let me tell us what this is.
Okay, so I created this bot. I guess the first thing would be a disclaimer. I would very much consider this an alpha build, not necessarily a fully refined bot. It has a historic 35% plus drawdown rate, so you kind of need to go into it with that mindset. Even recently, the last 10 days or so, it had a pretty significant drawdown, about 15%. But everything else kind of did too. So it was more following the market there, or at least a lot of the bots. I'm slowly working on updating the different parts of it, but the bot as a whole, I'm not really refining. So it's a bot that has 3 different sections. I am currently working on the first section more so than the middle 2 sections, if that makes sense. The goals when I started out with this is I wanted to create a bot that was using a bunch of different indicators than the ones that are currently in use. So a good example of that would be the 200-day moving averages as trend line. I didn't want to include that because a lot of other bots use that. TQQ for the long term uses that. I am invested in that. I'm trying to avoid cluster failure. This is designed to be a total market bot, so it should work in any environment, hopefully. It should not only work when volatility is high in bullish conditions or anything like that. It is mostly based off of mean reversions, and it uses a limited number of tickers. It uses the tech sector, semiconductors, high beta, what I would consider anti-beta, healthcare, oil, gold, and some bonds. So more defensive sectors and defensive equity sectors, a few commodities, a couple bonds. And it uses a limited number of indicators and timeframes. I wanted to keep things as similar as possible where I could.
Hey, are you enjoying this video, but you're a little overwhelmed or confused? That's totally normal. Algorithmic investing can be kind of complicated when you first start. I've been doing it for a year now, and I remember what it was like. But to help you out if you're a new person, I've actually started a newsletter to help educate you on the best strategies that are performing and show you which ones are making actual real money. So if you'd like to learn more about these strategies and designs and how they work, check out our newsletter and you will get access to the best strategies and their actual returns. You can also find this information on the Discord in the newsletter channel.
The indicators that it uses are the RSI indicator, the 10-day, the 14-day, and the 126-day. The 10-day is mostly in these first sections here if you're looking at the screen. These are short-term mean reversions. The bot is only usually in these for 1 or 2 days at most, and then it jumps out of them. The 126-day RSI indicator, that's 6 months. There are 252 trading days in a year, so half of that is 126. That's why I chose that. That is the long-term trend identifier. We'll get to that a little later.
Okay, you're not. All right.
Okay. But yeah, it's down here in this VMS section. Both VMS sections are the same. So this uses the XLK versus XLP. That is technology versus consumer staples. the thought process behind that is if the 6-month relative strength index of technology, if the money is flowing into technology and not into the defensive consumer staples sector, then you're probably in a bullish market. I do try and put tags into my bots that I make so that hopefully people, when they're looking at them, will have a general idea. The other ones it uses are 14-day RSI indicators, which when you get down into the BBD sections, it uses the 14-day RSI. I chose the 14-day RSI because the RSI indicator generally comes at 14-day levels. So that's why I picked it. We're kind of jumping a little ahead, but I would change that in future iterations. I think that potentially needs to be longer. So maybe 20 days, maybe even up to 30 days, but we'll go over that at the end.
Okay.
In terms of how it decides to pick stocks in certain environments, like the RSI 10-day ones, it's usually just picking a single stock. Or if it does need to pick between multiple different stocks, then it usually uses a 5-day, either a moving average or cumulative returns. And it uses those to kind of determine a little bit of directionality with volatility or with momentum. And it uses that as a dip buying. It picks whichever one is the most beaten down. And I tried to keep that throughout every section of the bot the same, just to avoid overfitting accusations, just to kind of keep everything as formal or as formatted the same, as uniform as possible. So we'll go over the first section now. That would be this SVXY for the long term. The name came from, I believe it was Cashin who created this section. And I kind of have been working with him recently on refining this down more, but he went through and found out a bunch of these different ETFs, broad market ones, and was really looking into relative strength index on those to try and find when they're going to top. I know a lot of bots use this section. This is at the very front of it. I would say that this is the last thing that got added to the bot, and it is also the portion that is going to give you the most cluster failure. So this is what the bot looks like if you took everything out. So normally in the whole big bot, when you got down to this section here, you would have the VMS. So if you look at this, when you get down to this section, I just put Bill in there so you can see just what the front of this section looks like. And this goes all the way back to 2011 on the back test, or 2012, early 2012 on the back test. And you can see that it is, okay, I thought I crashed there. It generally is not in these sections for a very long time. If you look at the histogram, the yellow section is where it's not in this. The orange section is where the bot is firing. And the entire purpose of this section is basically the market is overbought. So these are very high RSI numbers, usually 79, 80 range, or the maximum drawdown of the market. The market is experiencing massive turbulence because it's either dropping really fast or it's moving up very quickly in the cumulative returns.
Could you go down real quick to that section? Yeah, that's the by the dip NASDAQ logic, isn't it? The 6-day cumulative returns is less than 12.
Yes, it is.
Okay, so yeah, it's popping up and you're capturing it. Okay, have you experimented with move average returns? Because I know Hinome has done a lot of work with noise reduction, and he said that move average returns is a lot less noisy than cumulative returns.
I have not done anything with that. I should probably get with him because I think that a large outsized portion of gains in a lot of our bots are going to come from sections like this. I think that it's just with Composer's limitations as a platform right now, not being able to have ands or untils, these quick, 1 or 2 day trades, getting into and out of assets very quickly, I think that's where we're going to make most of the money.
Yeah, it's funny you say that. I literally just sent them a Loom video on requesting ands and something else like 10 minutes before this call. But that logic right there, for anybody that's watching that's new, that logic right there, the 6-day and the 1-day cumulative returns on the buy the dip NASDAQ is a really effective logic tree, because I think the best strategy I'm running, which is over 120% returns now, in like 7 months or 8 months, is it's a combination of TTQ for the long term and buy the dip NASDAQ. It's the 0.4 Hinome mod.
Yep, I like that one too. And this section right here, just at the front, this is all going to be super bullish, so it doesn't have the dip buying stuff in it. Those come at different portions in the later, like the RSI below 30 levels of different things. Those are kind of sprinkled throughout, but I would still consider those part of this. They're just not all put at the very front, if that makes sense.
Are they repeating? Are they redundant? Or are they?
There are a couple of them in there that are repeating or redundant. The main difference is the dip buying ones. It generally picks more assets because you risk getting caught in that death spiral. If it's RSI below 30 and you're only buying, TQQQ, it can still go down for another 10 days. So in not this current bot, but in other ones that I'm running, I use it with Hibble, and Hibble going back through the COVID crash, you'll see it has like an 80% drawdown or 90% drawdown if you use it. So you do have to kind of either gate it, or you have to put in some sort of check for it to where it'll search for multiple assets. So like this is the below 31. You got to have it pick different assets.
Yeah, that's probably a smart check for the death spiral.
So that's kind of the first section on this. I think most people will get this. If the RSI is elevated, you can expect it to do a mean reversion. If the RSI is really, really low, you can expect a mean reversion eventually. I don't want to spend a huge amount of time on this because it's not really the meat and the potatoes of the bot. So we're going to move on to the VMS section. This was, VMS stands for Volatility Momentum Switch. And this was kind of where the bot started. So the very beginning is 2 more of these checks. These are kind of holdovers from before. The real meat and potatoes of this comes from the VIX index here. This is the initial, when I started making this, I wanted to use the volatility index, the VIXY here, which is the short-term VIX futures. I had the theory that if you could get different market environments, different regimes for when volatility was increasing or decreasing, that it could potentially give you a better way to get in and out of stuff. That kind of didn't work, but with the failure, it led to different successes, if that makes sense. So it lacks directionality. It only measures speed. The momentum is either increasing or decreasing, but it's not going to tell you to go long or to go short.
I've got an idea there on that. I've experimented with it a little bit, but not enough to like be confident on it. You can actually do 2 RSI, like a ribbon check. So like I think it's like 10-day RSI above the 60-day RSI or something like that, and that way you can measure momentum on the volatility. It's just an idea. I haven't done it yet though. I've experimented with it.
So jumping a little bit ahead, that is kind of the same theory that the BBD section is, where it matches RSI ribbons. So the initial bot, when I first made the VMS section, it was just these, the the blocks here. That didn't work, so I had to go back, and that was when I decided that I had to add the trend line, the longer term trend. So I picked the technology versus consumer staples. The thought process behind that was, as the technology sector has more money flowing into it as opposed to consumer staples, it's probably bullish. But as soon as the money starts flowing into consumer staples from technology, that's people not necessarily becoming more bearish, but becoming more defensive. And this back tests pretty well, going back to like 2007. It's just finding what you have to do, what you have to fit within that. So if you have it just as the bullish function by technology, it's not perfect. It doesn't hit COVID. It takes a little bit for the swing down from 2020, I think it was, or maybe 2021, when the bull market flipped. You have a couple weeks in there where it didn't hit, but just as an overall trend identifier, it works pretty good. And it's not the 200 MA, which is what most different bots use.
That's pretty interesting. I like that.
The other one that I have tested in the past is XLU, so XLK versus XLU, and also SPY versus XLP and XLU. All of those have slightly different zones that they hit, and they all have pros and cons. Like doing technology versus utilities stops COVID. Like it happens right before COVID hits. So it's like kind of a built-in black swan catcher, but I'm not sure if that's going to hold up for the next one.
You could do it like a copy paste of that logic tree and just like do XLK versus XLU and XLK versus like another like XLH or healthcare, like cut it into thirds.
Right. And I originally was doing that in a couple of these. The issue is that this bot has just so many lines of code in it that Composer was not happy with me. Wouldn't say that. So once we had the trend identifier, we were able to get down into the volatility section. And these are very short-term ones that measure just kind of very broadly, is it moving upwards or is it moving downwards? And then an even shorter term one, is it positive or negative? So using two pretty short term ones, you can kind of see where it's going in the past 2 weeks and then the past week.
Yeah, I've actually used that switch before, the VXY less than, I do minus 1% just to cut out noise, but that is a solid switch.
Okay. And I guess I didn't, at the very beginning, I should have said this. The purpose of this bot was to trade often. I did not want to have something that was holding assets for long periods of time. So a lot of the switches in this or a lot of the identifiers and indicators are going to be shorter term timeframes, specifically because I want it to be trading different assets as much as possible.
That's interesting. So what's your philosophy behind that?
I was calling it chaos theory at the time, but it was kind of, if you can jump between different asset classes and just buy the dips on as many different things as possible, as often as possible, then you only need to be right, more than 50% of the time. That was what the Magellan Fund did, was they just were extremely high frequency and they were hoping to be right 51% of the time. And if they could do that, then they would make a lot of money.
Yeah,
so
that's exactly what I was going to say. Have you read The Man Who Beat the Market, the book?
I have not. It's on my list though.
It's phenomenal, but they go into deep detail of like they go through his history from like the 1950s to the current day and his different iterations of algorithmic investing, and they switched from holding. They used to do like very long holds, but the risk of doing a long hold or not many trades in a year is when it fails, it could fail big. But if you're doing like millions of trades every year, the fees are insane, but that reduces your overall failure risk because you just have more granularity.
That makes sense. So the VMS spot was initially a total market one. And I posted it into the Discord server, kind of just threw it out there in the testing zone, proving grounds or whatever it was. And I was like, hey, this isn't tested, but if anyone wants to help work on it. Didn't really get a whole lot of feedback from that. So one of the things, though, with this is, or that I noticed, was that because it didn't really have the trend identifier, it didn't work very well, but it was very good at picking kind of the tops and bottoms of when the volatility index was hitting. So it was almost like a pop bot for volatility.
Could you say that one more time and go back over that? So which logic did it not have that really improved it?
It didn't have directionality. So it didn't have the trend identifier. The trend wasn't working as well as it should have.
Okay, the one you're referring to, the 126 day right there.
Yeah, like that was helping, but because it was flipping so violently between 2 weeks and 1 week, it was not finding the short-term trend or really the medium-term trend as well as I thought it should.
Okay, so you have a long trend indicator and a short trend indicator. Where's the short trend indicator?
That's going to come in the BBD section.
Okay, and so that's also solid logic too from all of the books I've read and studied, is typically having mean reversion with then a short momentum and a long momentum indicator.
Yes. So because I saw that it wasn't really working, I had to go back, and that was what caused me to actually build BBD, was to try and fix the issue that I had. So this the cumulative returns here of TQQ greater than 5.5, that's one of the logics that that is kind of redundant in a lot of our symphonies. That's just kind of the historical average for when the Qs reverse, the triple leverage Qs reverse. One of the things that I noticed within this was that, or within this framework specifically, is that it was very good at figuring out when you can go super hardcore on it versus when you should be safer with it. So it kind of helped really refine when you should be going for like incredibly risk on versus, take the risk, but don't YOLO it. So that's why the VIXM versus this, UVXY and TEX here.
What's the logic that loads into that? If 5-day moving average, it returns as VIXY is less than 0. So if it's less than 0, then you're going.
This was actually the 10-day greater than 50% RSI, or 10-day less than 50% RSI. So basically, when the 2-week VIX is currently in an uptrend, you want to be a little bit safer with your VIX plays. But when the 2-week is down, then you can have it mean revert back up harder the other way.
Can you pull that into a chart real quick for people to see that? So I know probably some of the newer people, it can be confusing with volatility charts because they move inversely. If you have, just like on TradingView.
I am not smart enough to do that.
Okay. Wait, do you not design on TradingView?
I do not.
So wait, do you do any technical indicator visual design, or do you just?
I use TD Ameritrade, Thinkorswim, but I've got some custom indicators on that.
Okay.
So that was kind of the bullish side of this, was that you can figure out some really good places with VMS to really go hard on taking the risks. And then when you go down to the bear side of it, you've got your your pop at the top, but you really didn't want to be buying volatility, where normally you would buy volatility. In this case, you kind of don't want to. That's what I found out. It's much better to take some of the safer assets like gold. And then it also has the less than 31 for the TQQ here. That's just another one. But down here, I kind of found whereas in the top section, you want to go long volatility. In the bearish zones, you want to be going short volatility. So it almost seemed like the market was rising in those cases.
Interesting. So when we're in a bear market, you want to take a short position when volatility is falling?
Yes.
Interesting. That's very counterintuitive, but usually that's how it works with investing.
Yeah, it's just for whatever reason, this switch here kind of caused that whole thing to invert. And that was just trial and error. But as you can see, max drawdown's only 25% and it's 70% per year. So it tends to work out more often than not.
Interesting. Can I see the danger market conditions again? So how are you taking short positions? You're basically you're looking at volatility, but you're technically taking a long position on equities when.
Yes.
Interesting. Okay. Oh, you're using SVXY short term futures. You're going short,
and you can put like SVIX in there if you want to take more risk, but it won't backtest anywhere near as far.
Yeah. Interesting. I haven't seen that logic or anything like this yet.
So my theory behind that is that when the market is in a downtrend, volatility can't crash anywhere near as hard. Like kind of when the market's going down, volatility is generally going up. So, volatility should mean revert back the other direction.
You're following the trend technically.
Yes.
Inversely, but you're following the trend. That's interesting way to think about that. Huh. I'm going to experiment with that. That's some interesting logic.
So going back, all the things that are billed here, these were kind of the total market sections. And that was the area that I had completely different stuff in originally that didn't really work. So I had to invent something else to work in that zone. And that's where BBD came in.
Okay. So before we get into BDD real quick, is there anybody in here that doesn't understand that logic with the volatility? And feel free to speak up or just like wave your hand, and I can explain it to you because I'm sure that might have been confusing to somebody. If not, we can keep moving. All right, go ahead, Brian.
Right. So BBD then, BBD stands for beta versus bonds versus defensive. I wanted this to be a total market section. So I included every asset class in this: equities, commodities, bonds. But at the same time, I wanted to keep the number of tickers as low as possible. So it just has like Techl and Soxl. So it's got tech and semiconductors as the equities. It has high beta with Hibble and BTOL, which is anti-beta.
What's AGG and BSC again?
So AGG is short-term bonds, like 1 to 3 year. And I kind of want to go over BTOL a little bit for anyone who doesn't really know what that is. They are an ETF that has proprietary software, and they try and mimic hedge fund strategies. So they look at the different hedge funds to see where the money is flowing into the different hedge fund strategies, such as like long, short, or arbitrage, or if they're doing like commodity buy right, they'll look at that, and then they will alter their portfolio to be overweight in whatever the current hedge fund strategy that's doing well is. So they are technically anti-beta, They've got a negative beta, but they're generally kind of a market neutral thing. And the logic for why I was choosing Hibble versus BTOL versus Ag versus utilities here is I wanted it to be high beta versus anti-beta versus short-term bonds, and then utilities was a defensive sector.
Are these all in series? Are you doing a rebalance, or are they all in series checks?
They're just all. So let's see if maybe that no. Hold on. So it's funny you were talking about moving average crossovers. So this is like your moving average crossover chart, like the moving average ribbons. Mm-hmm. I think the way to visualize this is that each one of these ribbons would be the RSI of these different assets. So you end up with 8 zones. Like imagine this top one here is when Hibble is at the highest. So this zone is going to be like when, high beta is above, like this first section. So we have high beta is above bonds, and then also the anti-beta is above bonds, and here utilities is above bonds. So this is going to be high beta above, or so bonds is going to be the lowest here. In this zone, bonds is actually the second lowest, and utilities is the lowest.
Okay, so you're going from highest beta to lowest beta, essentially, or highest volatility to lowest volatility check.
Yes, but because this is 8 total sections, it's going to hit all of them depending on where they are.
And this is basically the pop bots design, right?
Kind of
similar.
Yes.
Yeah.
So if you went through and did each of these just one at a time, and you looked at the histogram, you would see that they fire very often, but the zones themselves are spread out. So it would almost look like this would be one section, and then the second, like a different section, would be a very similar histogram spread out across different time periods. So it doesn't stay in each section for a very long period of time. Mm-hmm. It's jumping between each different section in these as you get down to each one. And then at the bottom of each section, it'll pick between the different ETFs based on what should theoretically be doing well there.
Okay. Interesting. This is a very well put together strategy. So the main strategy 2.01, so you've got just the individual RSI checks, and then you go into the BDD, which is the one you were just showing us. Where's the VMS at?
So technically the VMS is the second one.
Okay.
So like this, everything here is VMS, and then the VMS ones are broken up into blocks, right? So you're going to have the 8 total blocks. Right. Technically, this would be a block, and this would be a block, this would be a block, and this would be a block.
Okay. So you jump into the BDD at the very end.
Yes. So then you go inside each block, and it has that. Are you going to like YOLO into a volatility thing, or are we going to go into the total market portion? And that total market portion is BBD.
Okay. So total market's BDD. Then VMS is essentially volatility measurements for the short side mostly.
Yes.
And then the SVIX is the basically the framework.
Yeah. So the way that it would work is like you're taking your total market, which is the BBD, and you're first identifying the trend, right? Bullish or bearish. And then you're identifying, is the volatility rising or falling? And then you jump into BBD and say, okay, which asset should we buy in this case?
Okay. So BBD is selecting the assets. Okay.
Yes. Everything other than BBD can kind of be considered a pop bot almost, or a different way to get into a pop.
Okay.
And all of those pops have the added benefit of if you're buying a pop, then you're kind of, those are always the reversal zones. So every pop that you have should theoretically be removing a bad section from the BBD, or a bad day, where, if you're trying to go long, but everything else is telling you to go, but the pop tells you to go short, then a winning day there is removing a losing day from your total market section.
Okay.
And these are all these are 14-day relative strength checks. Kind of picking between the different assets. I think I already went over that. There are 8 blocks here. This framework, this 8-block framework, is the same as VMS with its 8 blocks here. I just kind of copied that framework and moved it over. It's just, this is all equities, or equities, bonds, and different asset classes, whereas this one's all volatility. So all of these are 5-day moving average returns, or 5-day cumulative returns, because I wanted to, that adds the directionality for your dip buying, right? If you're buying the dips on all of these, the danger with it is that you're buying the asset that has the most momentum going downward. But the benefit is that you have the one with the best potential reversal. And these are all designed to kind of be the reversal zones. The problems that I see with this bot are, the potential problems are that it's only ever in one stock. So, and they're all triple leveraged generally. So when it's wrong, it's going to be very wrong, especially since you're buying the wrong one with the momentum going downward. But again, it's designed to trade as often as possible so that it's hopefully correct a few more times than it's wrong. And what, well, yeah, something.
Yeah, I was just gonna say that makes sense, that like over the long term, it should, even if you have like some bad days, it should equal itself out eventually.
Yes. And I've also tried to, because it's multi-asset, so it's got equities and like commodities and bonds. Theoretically, it has some built-in drawdown protection. Like, there were times where I could have gone through and eked out a couple more percentage points on the positive side, for the AR, but I prioritized drawdown as much as I could, where it made sense. So, like, 5% AR versus 5% drawdown, I kind of decided to save the drawdown. Mm-hmm. I think in the long term, that'll help it more than it'll hurt it.
So are you, first, how long have you been, when did you first start designing, which one did you design first, the BDD or VMS?
VMS. BBD was designed because VMS didn't have a good long short section.
Okay. When did you start working on this?
VMS was probably November, December. I've been messing around with volatility for quite a while, trying to find something that could measure it effectively.
If you could request something from the Composer devs, what would it be to make this easier?
I think that we need either more indicators, more than just RSI, and moving average returns, cumulative returns, all those are all kind of very samey. They all measure pretty much the same thing. So one or two more different ways to measure, like for these filters. Let's see. like the functions. That's what they are.
Yeah.
Like cumulative return, standard deviation return, moving average of return. Those are all kind of the exact same.
Which indicators would you want?
I think that it would be nice to have some of the ones that were kind of trailing, like what's it called? Is it AVP or whatever?
ATX.
ATX.
Average true ATR is average true range. ATX is average true something. I can't remember.
Yeah, those would be nice. The ATs, maybe just putting in something like a Bollinger Bands, or finding some way to measure a trend line. The CCI would be nice. There are a bunch of different ones but I understand why they don't have them. They'd be hard to code up. Maybe even different oscillators, if you could find something to have an oscillator.
Yeah.
I think also, go ahead.
No, go ahead. I was just gonna open up questions if anybody had some. But what
I was going to say, in the future, another problem with this is, like I said, this 14-day, that is maybe too short. I could see that being increased. I've been having trouble, I think, with this utilities indicator, because it was initially designed to be a defensive asset, but I think that it is too volatile. It might actually be the most volatile of all of the checks in here. So there have been a couple days where it is traded differently for different people right around the trade time, just because, and it's always a UTSL block. So
UTSL is utilities. Is that a 3X?
Yeah, it's 3X utilities. I'm thinking that could potentially be a different sector, such as, healthcare, communication.
You could extend the length
discretionary.
Have you experimented with using the 1X versions, like the UXL?
I have not. That is something that I do want to do in the future. Theoretically, though, the RSI for those should be similar. Maybe 1 to 2 points off.
Yeah.
I also think in the future that there's a lot of room for BBD specifically to switch to being assets that are far more correlated. Like you created the better QQQ for the bullish section of the QQQ for the long term, or a better NASDAQ.
Mm-hmm.
I think that there's potential merit for this to be used to make a better QQQ section. Like, instead of picking non-correlated or only semi-correlated assets, what if you did like TQQQ and Webble and bots and Cloudle? So you were just in a single sector, you were just picking between different ETFs.
Have you tried taking that 126-day trigger and experimenting with for the long-term framework with it?
I have not, but that is something that I want to do in the future. I do not have a lot of time on my hands.
I've been crazy busy lately.
I think that there's, maybe you could do bonds if you want to do like the total bond market, and then 1 to 3 year, 7 to 10 year, and 20 year. You could have those as your 4 assets. And I'm not sure that it would work, but there's a way to experiment with all these things in here. So I think that's where it would move to in the future. I think that there's also room in the future for the VMS framework, specifically because, in the first section, it kind of shows that when to go really hard. And then in the second section, it shows to kind of flip and to short it instead. I think that there is potential to move this, the front runner, specifically within this framework, and experiment in there. So to invert the frameworks of these. because in this section, TQQ's high, we're going to buy the long version. Well, over here, since this is in the front, it almost nullifies this back half a little bit. So I'm thinking that there's a way to invert these two to start with the VMS and then to put these in that could potentially lead to a more accurate indicator. So I think that's where the future of this bot is going to go, is to kind of mix up the frameworks a little bit and then to try and focus BBD down to something that's not super broad full market.
Okay. So for new people getting into this and designing, what recommendations would you have for them starting out, based on everything you learned from designing this strategy? Like what's the main takeaways from like the high level or like the design philosophy?
So I think from the highest level design philosophy, if you understand which, like, BBD is a self-contained long short bot. It doesn't have the pops. I think that every successful bot will have 3 sections to it. It'll have your trend identifier. It'll have your pop section. That's what I call them, dips, rips, or your short-term mean reversions. And then it'll have your like recurring strategy within the trend.
The asset trend following strategy.
Yes. So you have your like longer term trend, and then you have whatever you're doing for your short and medium term trend within that.
Okay.
And I think that when people are designing bots, if you're a new bot builder, you kind of are going to get caught up with trying to mesh everything together all at once. And that can become overwhelming. So don't put in your RSI below 30 and above 80s, and just design something that is purely within your trend. Because that's going to reduce the noise from where your bot is failing and succeeding. Of course, go back and add in the elements you want.
Yeah, that makes a lot of sense, because each one of these bots here that you've designed is the first one is basically the macro, and then the next one is the short term, and then the next one is the actual individual mean reversion or dip buying. And have you read Unknown Market Wizards Chapter 8?
I have not.
He's a 20-year algorithmic investor and designer, and he basically breaks down like what he learned over 20 years. And he literally said the exact same thing that you just said, which is like you need a long-term trend, a short-term trend, and some kind of mean reversion to have a really good bot. So it's like the tried and true practices of building bots seems to be the same. And you even see that in the simplest strategies we have that are profitable, like the TTQ for the long term, the bare bones ones, where you've got the 200-day and then the 20-day, and then you have the mean reversion.
Yes. Everything else on top of that is just gravy, or, just refining those things. But I think that if you're going to be a builder, or if you want to build, the first thing you should do if you're going to go off somebody else's spot is be able to identify what each of those if-else statements is. If you can do that, then you can really start designing some good bots.
Karen, you had asked earlier what we would ask for from Composer, and Brian, you're hitting the nail on the head. I would love to be able to click on one of these if statements and then see represented in the chart when that's triggered.
Yeah.
So that you can follow it through, because like you said earlier, Brian, just we're doing this stuff by trial and error based on back test, and we're not seeing exactly the fine points of what we're affecting.
Yes. If you want, I can very quickly go over, it'll probably be about 5 minutes, but I can tell you how I very specifically got this framework, how I figured out each section.
Sure.
So
that'd be great.
I kind of had just this. Let's open up a new one, new Symphony. Right. So I've got each individual section within here. Now, if we're only doing the very first section, just forget that I've got these. So you still got all of the other framework. I went through and basically had each of these as bill, right? So I first had all of the different 8 sections, and I went through and did bill for all of them. So now, we've got the bullish section, this above this, above this. And you went back and look at the bot and you see the different zones where it's firing. And I went down to the histogram and was like, okay, here's the zones where it's firing. And then I just went through and basically trial errored. Is this a bullish section? Is this a bearish section? And then figured out what went in there. And then, so the second one I would go through, and I had 2 copies open.
Yeah, basically isolating each section to see where it's firing. And I think that, I don't know what you would call this, but there's a kind of like, I don't know if it's called like intuitive learning, but it's hard to teach like the lessons that you get from doing what you're doing right now.
Yeah. So, that was the first section. There was the previous one. Here's the second section of that. Same thing. It doesn't fire anywhere near as often. And that was, I just literally went through and did that for each different zone. And it was, finding out what works where. And I mean, you've got a little bit of theory with it. Like, you're going to know this is a bullish zone versus a bearish zone. But, that was kind of how I had to do it, designing the entire thing. And you imagine you're doing that 8 different times, and then you're doing it 8 more times on the other side. And then you go back to VMS, which is 8 sections of this. So, I mean, it was a process, and it was mostly trial error.
That seems to be how all the best builders do it, though. Anybody that's built really good bots, they do it exactly like that.
Yeah, that makes sense. I would just love it if Composer allowed us to just click on that dot, that blue bubble, and then we would show up exactly the way you just showed it.
Yeah,
that's amazing.
It would save a tremendous amount of time. Anybody else have any questions?
Yeah, I got one. So, as we all know, BBD is a little flighty around trading time. And typically, I mean, lately at least, it hasn't matched the back test very well. And I'm wondering if you have tried adjusting. I forget where it was here, but the section that typically caused that problem, just to get a better sense of, get a better back test.
The answer to that is no, I haven't had time. The slightly longer answer is that I've kind of been able to isolate it down to multiple sections, and it's almost always around the utilities indicator. So the first thing that I am going to do with this when, refining or redesigning it is I'm going to pull that out and I'm going to switch it with consumer staples and see if that is better.
Have you been running all of the different versions of these with live money?
I ran them initially with live money. I am not currently running them. I'm running different elements of them within other bots, if that makes sense.
Okay.
So,
have you identified the ones that you are running and the ones that are working well? Have you identified the logics that's firing effectively?
Yes. So, like, this is my current dip rip. This is this one. It's just a more refined version of it.
Refined, do you mean stripped down or just tweaked?
Tweaked. So
Okay.
It's kind of taking the different best portions. So this is what I'm comfortable running. So let's see, the first one on this is like QQQ at 79. This one's QQQ at 78 now, but you open it up and it's picking when to go super risky versus mildly risky versus, still VIX, but medium-term VIX. So the refinement has come within individual portions of this. And I run this code in front of almost all of my bots. The only reason that I'm not running this code on certain bots is because I don't want 100% cluster failure.
Have you shared that one, Dips Rip?
I think I shared this one in.
Oh, I see a safe dip rips.
Yeah, that's kind of this one, but I mean, I can share this one right now. I think the safe one doesn't have Hibble and Tark in it.
Okay. If you were to strip this down to a simplified version, what would you do? What would you remove?
If I was, well, define simple. So I would say that the easiest way to make it simple would be to get rid of the Tark and Hibble. These are the ones that I'm the least sure of, just because they've got the shortest back test. And other than that, I mean, I think that this is simple. I understand that it's 1,000 lines of code, but every single one of these checks is the exact same.
Yeah.
It's all 10-day RSI above 70 something. And then when you go in here, really, this is just saying if the 10-day RSI is above 78, you're buying VIXM. Unless it's above 80, then you're buying the 1X. Unless it's above 83, then you're buying 2X. So that's like every single one of these sections is that exact same format. You know, it's saying if it's above 84, go 2X. If it's between 84 and 81, go 1 time. If it's between 81 and 76, then buy VIXM.
Have you instead of using VIXM for all the shorts, have you experimented with using the actual short version of the tickers that you're looking at, like like SQQQ for the TTTQ and SU for SPY and all that?
I have not. I would theorize, though, that could work, but the best way to do it would be a filter with picking both of them.
Okay.
And maybe even doing a filter on this section could. I really have no time.
Yeah.
I work a full-time job, a part-time job, and I'm a single dad of a 2-year-old.
It doesn't, what are you referring to, Deeds? It doesn't work well since they aren't the true representation of the actual asset?
So it works great to a point, but I've found that since these are all like really fuckily constructed derivatives things, one, there's a bit of a lag, which isn't really a huge deal for day trading, like the whole day. But two, like the signal is not representative as well. So like if I were to try to trade SPY based off RSI of UPRO or SPXL, it fucks it all up.
Okay. Well, anybody else have any questions? Well, thank you, Brian, for taking the time to do this. I know you're extremely busy. Thank you for showing us, and hopefully it'll get some people at least educated on better design and maybe people jumping in to experiment with this thing.
Well, I appreciate the opportunity to talk to you about it.
Yep. And anybody that's watching the recording, if you have any strategies or designs that you want to share with people or things that you've learned, feel free to DM me because I want to try to start doing these calls at least once a week. I don't know if we have enough strategies or enough people to do that, but I think it'd be a great way to distribute the information and knowledge that we have throughout the community. Now, I have been, just so everybody knows, I have been running this strategy live on the Genesis portfolio, which is the new portfolio I launched for the premium newsletter. And this strategy, it peaked at 54% on May 25th, which, let's see, March, April, May. Yeah, so about 2 months it hit 54%. And now it's currently at 39%, but it's been doing really well. And Brian, if you send me that one that you're using that you're confident on, I'll start throwing live money into that as well and tracking it.
Are you talking about the Dips Rips framework?
Yeah, whichever one that you're running live that you like, that you're confident about, I'll throw money into that and start tracking that as well.
Okay.
And then I guess simple plug for anybody else that's watching that's brand new and you don't know what the hell you're doing. I created a newsletter and some individual strategies that I'm tracking. They're all built off of like the best strategies of the server over the past year. Pretty much all of them are profitable except for the Dreadnought, which is only minus 0.5 right now. But they're up 12, 13, and 5 and 4%. But if you want to learn about that newsletter, it is in the Discord at the very top under newsletter. So you can learn about all these strategies here. Other than that, if anybody has any other questions, go ahead and shoot them, or we can end the call.
Hey, Garen, I'm going to send you my talking points Word document that I created just in case you want to do anything with it. You certainly don't have to.
Oh, that's interesting. Like that reminds me of something I just found recently. I know Hassan was using ChatGPT to do like analysis on videos, but there's actually an interesting plugin now for if anybody doesn't know for ChatGPT. Let me just do this video. I think it's called. It summarizes YouTube videos instantly for you, and it'll tell you all the talking points. So if you ever want to like quickly go through like an hour or 2 hour long video and find all the little nuggets, it will do it for you. And this thing is called, what is this thing called? Merlin? I think it's Merlin. ChatGPT Merlin. Yeah. But here's all the little talking points. So it's a quick way to do it. But you still send that to me, Brian, and I will. Oh, you guys can't see my screen. Hold on. Right down here, Merlin, you click it and it will give you a breakdown of the YouTube videos that you're looking at and all the timestamps. And it also has some like interaction between websites. But all right, I'm going to kill the video then. Thanks, Brian.
All right. Sounds good. Thanks all.